This is a Momentum Media production.
Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
Well, g'day everyone and welcome back to another instalment of the Property Showcase. I'm your host, Tom Gilmore, Media and Marketing Strategist here at smartpropertyinvestment.com.au. Guys, this podcast comes with a little bit of passion, and this passion comes from a good place. It's just going to be a little bit more centered around conversations that I'm hearing in the public, people who are asking me questions in the street and I suppose professionally as well, just centered around things like cash rates, interest rates rising, and just, I suppose, just an overall scare in the market for some reason. And I really want to knuckle this down and sort of erase these worries from punters' minds, because you shouldn't be scared. And to help me with this conversation and this dialogue, I have a leader and an ex-military personnel. He's the director of Atlas Property Group. His name is Lachlan Vidler. Lachlan, how are you going?
Good morning, Tom. I'm good. How are you doing?
Yeah, mate, I am doing really well. Much better now that I have you in the studio, mate. How's things?
Things are good. Things are busy. Still, great fun, great market to be investing in. So, things are always busy.
Excellent. Now, as always, I'm going to try rein and reel as much stuff as I can out of you. You're probably not going to give away any IP about where you're buying, but I'm going to try my absolute hardest. Today's conversation, I woke up and I read all these headlines today in the news, and basically what I want to do, Lachlan, is I want to knuckle down some of these headlines. And I want you to just point out whether it's something to be worried about. I want you to point out whether there's some truth or some false to it. And I want you to use just comparatively what you're doing personally in the industry, but also really what you're doing with your clients as well, just to sort of justify how to break this all down. So we won't, go through 10 stories, but we'll go through a few of them just to sort of ease people's minds, because I'm sick of investors or just everyday buyers. I don't know about you. I'm not sure what questions you get every single day. Maybe you can share, but I just want to erase this, uncertainty is probably the wrong word, but just this scarcity in the market. Like, how would you approach that in a minute?
It's just the media. I think people forget that headlines make stories and headlines sell papers, or headlines sell whatever it is that media companies are doing. And that's why they're there. People aren't going to say property performs at the expected level. It's not exciting. It's not going to sell a newspaper, right? It's not going to hit the front page of the AFR. So I think sometimes people forget that and they just see whatever's going on, and it's human nature, right? Like, you see something enough, you're going to start to believe whatever it is that it's saying to you. And when you're seeing a million and one stories about whatever it is, whether it's the interest rates, whether it's about property prices, whether it's about affordability or unaffordability, eventually you see it enough that you start to believe whatever it is that you're reading. And that could either be really, really good, or that could be really, really bad. I mean, all we have to do is look back 12 months ago and all the headlines were saying how great property is. So what did everybody think? How good is property? And now some headlines are starting to change and look at different things, and there is probably a little bit more of a pessimistic tone about certain, different elements about finance and property. So what are people starting to believe? Oh, times are tough, where the sky's falling, but it's not the reality. And it's important for people to remember that, because Australia is a big place and there's lots going on.
Yep, I agree. That is a perfect segue into the first headline. Regional Australian market continues its profitable run. Oh, what a headline. True or false?
Generically speaking, on a large scale, it's great. And yeah, it's probably true. Regional property is performing really, really well. But what's true and what's false out of that? Well, yes, on a large scale, probably true, right? If we added up all the different regional cities all around Australia, and people have to remember that as well. Regional city, right? If you're not a capital, you pretty much have to get classed as a regional, because that's all that there is, right? That's the way that markets get broken down in Australia. On the whole, yeah, doing really well. But I guarantee you, some places will be doing really well. Some places will not be doing so well. And that would have been the same throughout the whole pandemic. So not everywhere's the same. And it's important that you actually dive into the detail to really analyze and understand what your market that you're looking at is doing.
Yeah, we were having a yarn just off mic earlier, just about going through the years, and you can get this information yourself. right? Everyone has access to this information. You can go through the history books. You can break down different market regions, rural and urban, completely up to you. But you can actually pay attention to what was going on against all the analytical figures that you need. And we pointed out 2018, that Bellingen, which is a lovely part of the world, but forgive me for pointing out that it's obviously a very relaxed part of the world. A bunch of hippies up there. No offense to you, I love you. But it was the most profitable region in 2018 in the whole of the country. Like that's insane. There's nothing going on.
100%. I mean,
in a time, as well, that everything wasn't so great around the country. So you got to pay attention to the minute details.
100%. And that's the thing that I think is really important for people to remember is that data's great, right? I love data. Data is the bread and butter of what I do and what we do for clients and why we get really great results. But the data can only tell you a certain story. And that's why, for example, mining towns always attract significant investment, but then people always, not always, but often wish that they didn't because numbers said it was doing really well, but people didn't interrogate it far enough. And then they don't realize perhaps that, oh, wow, it is a mining town. It's one industry. As soon as people leave or the mines stop and close, things are going to go poorly. So then when that happens, people go, oh my God, but it was such a great place to invest. So that's the part that data can't tell you is then going that extra level of depth to be able to really understand what's happening, to not buy into the headlines on, oh, this place is great, you should go here, or this place is terrible, you shouldn't go here.
Yeah, 100%. All right, next headline. Stamp duty adds 2 years of savings for some first home buyers. I'd change that. First time buyers. All right, let's not be attacking just the owner rock. Let's just someone who wants to invest in property, right? Just going straight in for it. How does that headline sit with you?
I'm sure that if I went through and read the full article, whatever numbers they put there, I guarantee would probably support that statement. But what people have got to realize is that there's a lot more that underpins that, right? How much is the value of the property that they're using to make that headline? How much do you earn to then go, it takes 2 years, right? For some people, it could take 4. For other people, it might only take a year, right? So there's a lot of different things that actually underpin a headline like that. And it's also important to remember that, say that was true for you, there are different ways that you can go about, say, something like stamp duty, right? You could look to receive help from family members. You could look to use other assets that you have to sell them to then fund it, right? If you've got a really healthy share portfolio, you might go, you know what? I now want to transition into property, right? So it's not just about going, hang on a minute, this is the one-dimensional linear approach we got to take. We've got to look past that to actually understand what goes on behind it and how it might apply to your circumstances.
That was a perfect point because I'm just going to break down the first sentence within this article and how you can actually just adjust your mindset. But this is going to give some great context as to what it is, right? And see if you agree. So based on the headline of stamp duty adds 2 years of saving for some first home buyers, saving for a home takes years for the typical first-time buyer in Australia's largest cities. As much as 2 years are spent simply building up the funds to pay the cost of stamp duty, according to new data. Where do you think the key word was in that statement?
Largest cities.
Largest cities.
Yeah.
Maybe you shouldn't be buying in the largest cities.
Absolutely.
There's loads of other towns going around.
Absolutely. I mean, even if we try to keep the conversation somewhat, in the majority and we go, all right, Sydney and Brisbane, right there, you've got, I'd have to look at the numbers to see what the actual numbers are on them. But at the peak of sort of the property market that we've had, Sydney was, according to some sources, up around like a 1.2, 1.3 mil median mark. Brisbane was probably sitting around the 800,000 mark. You've got hundreds and hundreds of thousands of dollars of price difference there, let alone in stamp duty.
Yeah, 100%. Okay, let's move on to the next one. Or you know what? We were also talking about this off mic, just purely based on the weather and, La Nina or La Nino, whatever it's called. Terrible thing. Obviously, a lot of Aussies have been affected by the floods and shout outs to them. My respects with you. 500,000 properties at risk of being uninsurable by 2030, report warns.
Ooh, scary headline.
It is a scary headline. I wonder why they wrote that.
What was the number again?
By 2030.
How many homes though?
500,000 properties.
500,000 homes. Okay.
Now, I have some inkling that I might know where some of these areas are.
Yeah. I would say that a lot of those areas are probably areas that are already on the cusp of flood zones or bushfire zones, things like that. I think it's a great headline. It's very scary. It also, again, would be objectively true on some scale.
Yep.
But what people have to remember is that this is where due diligence comes into your property research, right? If you're buying in a cyclone area, what are the odds? You're probably going to have cyclones. And as we move through, climate change, and we won't get into a discussion on that, but as we move through that, right, if you are right next to an area in 30 years or 40 years or 50 years, yeah, sure, maybe that's the case. Maybe you might become affected. But if you do your due diligence, you're going to understand what environmental concerns are around properties that you might be buying.
I think this is where you sort of come into the picture, right? Like keyword being due diligence, right? And you're looking in there, and if you are doing this on your own, I mean, full hats off to you, because if you were looking in Windsor right now, Richmond, those areas that were just completely destroyed by floods, and not to mention obviously the whole bloody East Coast up north. I mean, you're running the gamble. You're running the gamble, and if you're not going to insure it, then far out. Again, you've got some balls that I do not have. And look, fair play. If you secure a good deal and you outlast it yourself, you know what? You won. Well done. But this really just comes into play where I think you can come in and help, because you do know this stuff. You do know the areas that you're working in, and you probably, my rough estimate guess, I don't know because you won't tell me where you invest, is not, affected by these crazy things that you can't control.
Absolutely. Two things I want to say on that. First one, I think it was in maybe even the last showcase you and I did. I think I said something along the lines of, if you could buy a property, any property, doesn't matter what it is, say it was massively affected by floods or bushfires, but you could buy it for $1, you'd probably do it, right? Like, it doesn't really matter where it is. If you could buy it for $1, you would. So at any point, there's a cost-benefit analysis. And if you're going to be buying in these areas, it's just important for you to understand what that is, right? Because you got to bring those estimates into it to go, is the juice worth the squeeze? And at what point is it and what point isn't it? So that's the first thing I'll say.
Yeah. Yep.
Second thing I'll say is that, due diligence. It's the most important thing. There's no property is perfect, right? If you buy a property even 5 or 10 years old, it has sat out in the rain, the hail, the shine, the thunder, the storms, the lightning, everything for even 5 years, right? There are going to be problems with the property, right? Probably not big, but there's going to be problems. And it's important to understand that. But if you don't know how to do your due diligence, or you don't know what you're looking for in your due diligence, and that's probably the other thing, you got to know what to look for. You could be setting yourself up for disaster down the track.
Yeah, 100%. Would you say that there's a sort of checklist that you run with your clients? Just being like, hey, because I assume people come to you, right, and be like, I don't want to invest here. And you probably go, that's silly. I was about to use another word, but let's just say that's silly because of A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, right? And what is that sort of checklist, right, of due diligence that you use with people? Yeah,
well, we've got a massive one. I think last time I looked at it was mid to high 20 points that we go through. And the thing to remember is, right, nothing is going to be 100%, right? The point of a due diligence checklist or a due diligence list is just to understand where your risk exists, okay? Mm-hmm. If you can accept that risk, that's great, right? Some things are more risky than others. So, for example, is it in a flood zone, right? That's probably, for a lot of people and for our clients, big no-no. If it's in a flood zone, there'd have to be an incredible price attached to this property to warrant buying it, right? But other things might be, what are some of the local amenities nearby, right? It'd be great if you had a hospital, the best schools, the shops, everything within a 2-kilometer radius of you. That'd be excellent, right?
Yep.
But if it's not there and it's a little bit further out, it's not necessarily a red flag or a problem. It's just understanding where the risk exists, okay? And the risk in that case might be, another area closer to some of those things may be more desirable, right? So it's just understanding.
Let's use the due diligence then based on, no one's got a crystal ball. I'm not putting you on the spot here, but I kind of am. Let's break down the rest of the year, right? The general sentiment is, and something that we've spoken a lot about at smartproinvestment.com.au on the SPI show, of course, this show, and many others like it, there is the course of rents rising, or at least staying strong, right, across the board, manufacturing, cash flow, and I suppose little technical, unique things that you could be doing. What is the due diligence that people should actually be taking place right now, just given the environmental sort of change in the market, the sentiment in the market right now, what people should be looking for?
Well, sentiment, I'm glad you said sentiment, because I think that's the biggest thing, right? I think right now, the amount of people I'm talking to that are coming with questions around, how are the interest rates going to change things and this and that? And realistically, from a numbers perspective, the interest rate rise does very little. I think we were just running some numbers on the phone calculator before. On a $500,000 loan, your payments go up by just over $20 a week, right? By the interest rate increase. So what's that? That's half a carton of beer, right? Or probably half a packet of cigarettes for the people that smoke. It's very small scale stuff. It's one Uber Eats meal, right? Or probably even less than these days. One Uber Eats meal, you eat less, right? So on a numbers basis, not a big deal. Sentiment, on the other hand, that's the thing that changes more than anything. So, and that's why it's important for people to remember that these things aren't a big deal. And we're actually moving back to a normal course. But I mean, looking forward, how do I see it? I think right now, markets are moving, right? There are still lots of markets going up in price. There are markets that are stagnated. There are some markets that will be dipping in price, right? Don't expect big dips for anyone who's a bit worried, okay? It'll just be, it'll probably be quite minor over the long term. And that's the other thing to remember. It's always about the long term. But I think that we're now going to be moving back into a time where cash flow is going to be really important, right? We've got loan repayments going up, cost of living going up. Part of that means rents should be rising, okay? If that's the way that we're moving, rents will rise as well. So when you're looking at properties, the things that I'm looking for at the moment are, where are your value add opportunities? Firstly, because you can get equity increase, which is great, future deposits, things like that. But it's also increase in rent and cash flow. So do you put in that extra aircon unit? Do you maybe throw 10 grand in the kitchen and you get 50 or 60 bucks a week extra rent, right? These are the things that we're looking at for clients is, you don't want to have to do them, but you want the opportunity to do them because then you can choose, right? And I think choice is important. So I think cash flow is going to be really, really important. And I think that a lot of people who already own can attest to the fact rents are rising. I mean, one of our properties, we just put the rent up by almost $90 a week. Yeah, right. And that wasn't because we're bad people and we want to take all the money out of our tenants. It was because based off the last assessment, we hadn't moved, right? We were just before things started moving. And now the market's moved so much that our property was so under rented, it had to go up. And you know what? The tenants stayed and the tenants agreed to pay it because they knew that it was market movements, So cash flow, so important. And if you've got opportunities to increase that, that's going to be a big wins.
Do you think it also just playing into it as well? You're investing accurately and well, and you're in a place that has an extremely low vacancy rate. If that person's not going to pay it, someone else probably will.
Absolutely. I think a property that we bought last week, just through the terms that we had going, we're already able to put it up for inspection. Inspections happened over the weekend and we had 12 applicants, right? Day one, inspection one, 12 applicants, all right? Some of them obviously won't be the sorts of tenants that you'd probably want compared to others.
Hopefully they're not listening to this.
Yeah,
either,
sorry if you are. I won't name the location. But the market's strong, exactly right. It's if you're buying good spots, good reason for people to live there, multi-industry cities, if you're in regional or obviously in good pockets of capital cities, there is so much demand. Right? I had a friend of mine who actually said that they just went to rent an apartment in Brisbane and they pretty much had to beg the property manager to let them rent the property because they'd missed out for 2.5 months prior. Jesus. Yeah. And as everybody would know, that's an avid listener of Property Showcase or Smart Property Investment Show, that Brisbane had a massive oversupply of apartments for years and years and years. But that's now the rental situation we're in, that people are literally begging to get into some of these places. Yeah. So you can only imagine what nice houses in well-located areas are doing if that's what apartments are like.
Rubbing my hands together, mate. This is what we're talking about.
The land of opportunity.
The land of opportunity. Lachlan, mate, thank you so much for joining me and actually breaking down some of these headlines. Guys, everyone tuning in, if you want to hear more of Lachlan's extremely intelligent brain and you just want to have a yarn to him, you just want to pick up the phone and have a chat, you're being serious about, investing into your financial freedom, into your financial future, but you're stuck, you don't know what to do. Lachlan, how do people get in touch with you?
They can just come to our website, atlaspropertygroup.com.au. You can fill in an inquiry form on there. There's our phone number. You can just give us a call if you just want to have a quick yarn. So that's the best way to get in touch, or through our socials. We're pretty active across all of them, but we'd love to hear from you.
100%. And if you also just want to hear more of Lachlan's lovely dulcet tones on any of our other podcast episodes, you can jump on to smartpropertyinvestment.com.au. Go to the podcast section, go through SPI Show. You can find Lachlan scattered throughout the platform there and listen to a few of his other episodes too, because it truly is a really, really cool journey. Obviously, you're ex-military, right, Lachlan? So there was a plan and a strategy right from the get-go. I think that just sort of goes to show how much of a regimented person you are at the end of the day. So
plans and strategies.
And strategies, mate. Absolutely. And executing them well.
Absolutely.
But excellent. Lachlan, thank you so much for joining us, mate.
Thanks for having me, Tom.
No worries.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.